Did you know that owning just one rental property could set you on the path to financial freedom? Imagine this. Your tenant pays your mortgage, your property's value grows over time, and you pocket a profit every month. Plus, with the right strategies, you can make this process secure and profitable from the start. Stay tuned because this video is packed with everything you need to get started with rental property investing. A strong hook is crucial in real estate investing. Did you know that 90% of millionaires have made their wealth through real estate? By capturing attention early, you set the stage for success. For instance, consider John, who started with just one rental property and now owns 10, generating a steady passive income. This could be you. Are you tired of living paycheck to paycheck, worried about unexpected expenses, or simply looking for a way to grow your wealth? Many new investors face these challenges. Take Sarah, for example. She felt stuck in her 9-to-5 job, unable to save enough for her future. Or consider Matt, who was overwhelmed by the complexities of managing his first rental property. According to real estate expert Jane Doe, many beginners underestimate the time and effort required to manage rental properties effectively. But with the right knowledge, you can protect your investment, secure your future, and grow your financial freedom. Let's dive in. Let's start with the basics. A rental property is real estate you purchase to rent out to tenants. Here's the magic. Your tenant pays rent, which covers your mortgage, property taxes, and other costs. Meanwhile, the property appreciates in value, building your wealth without much effort. For example, say you buy a $250,000 home. You make a 20% down payment of $50,000, leaving you with a $200,000 mortgage. At today's average interest rate of 6.5%, your monthly payment would be around $1,265. Now, if you rent it out for $1,900 a month, that's $635 in profit. And that doesn't include future appreciation or tax benefits. For beginners, it's crucial to research the local market thoroughly. Understand the demand for rental properties in the area. Always inspect the property before buying. Unexpected repairs can quickly eat into your profits. Screen your tenants carefully. A reliable tenant can make your investment smooth, while a problematic one can cause headaches. Lastly, have a financial cushion. Unexpected expenses can arise, and it's wise to be prepared. With careful planning and smart decisions, rental property investing can be a rewarding venture. One of the smartest legal moves you can make as a real estate investor is to set up an LLC, limited liability company, for your property. An LLC separates your personal assets from your business assets, offering protection in case of lawsuits or financial issues related to the property. For example, if a tenant gets injured on your property and sues you. If your property is owned under an LLC, only the LLC's assets are at risk, not your personal savings, home, or other assets. To set up an LLC, you'll need to register with your state's business authority, which usually costs between $50 and $500. If your property already has a mortgage, you'll need to work with your lender to transfer ownership to the LLC, a step that may require additional approval. While this process may take a little time, the legal protection and peace of mind it offers are well worth it. Before buying any property, you need to run the numbers to make sure you're getting a good deal. Consider everything: the mortgage, property taxes, association fees, insurance, maintenance, and even special assessments. For example, if your total expenses come to $1,400 per month, but you can only rent the property for $1,300, you're losing money. The key is to look for properties that offer positive cash flow. This means the rent you collect should exceed your expenses, allowing you to profit monthly while building equity and enjoying appreciation. To find good deals, conduct thorough market research. Look for emerging neighborhoods with growth potential. Use negotiation tactics to get the best price. Don't be afraid to make lower offers and ask for concessions. Next, protect yourself and your property by having a solid rental contract. A rental contract is a legally binding agreement that outlines the rules and responsibilities for both you and your tenant. It should include details like the rent amount, payment due dates, and policies on pets, maintenance, and late fees. Common clauses include security deposit terms, lease duration, and tenant obligations. Ensure compliance by consulting a real estate attorney and adhering to local laws and regulations. This step is crucial to avoid misunderstandings and potential disputes. Not all tenants are created equal, and finding good ones can make or break your investment. To screen tenants, conduct background and credit checks, verify employment, and call their previous landlords. Look for tenants with a steady income and a history of paying rent on time. Red flags include inconsistent employment, a history of late payments, or previous evictions. A bad tenant can cause damage, miss payments, or even lead to eviction, a costly and time-consuming process. Best practices for background checks include verifying the tenant's identity, checking their credit score, and confirming their rental history. By following these steps, you can minimize risks and ensure a smoother rental experience. Another must-have is landlord insurance. This protects you against unforeseen events. There are different types of landlord insurance, including property damage, liability, and loss of rental income coverage. It's crucial to choose the right policy by assessing your specific needs and talking to your insurance provider to customize a policy that fits your requirements. If managing tenants and repairs sounds overwhelming, consider hiring a property management company. They'll handle everything, from screening tenants and collecting rent to dealing with repairs and maintenance. While this service typically costs 8 to 12% of your rental income, it can save you time and reduce stress. Just remember to factor this cost into your expenses when calculating your cash flow. To choose a good property management company, look for those with strong reviews and a solid reputation. Ensure they offer comprehensive services like tenant screening, rent collection, maintenance coordination, and handling evictions. A good property management company can make your investment much more manageable and profitable. Let's revisit what we've discussed. To succeed in rental property investing, you need to follow some key steps. First, set up an LLC to protect your personal assets from potential liabilities. Second, always run the numbers before purchasing a property to ensure it will generate positive cash flow. Third, use a solid rental contract to protect yourself legally. Fourth, screen tenants carefully to avoid future issues. Fifth, get landlord insurance to cover unexpected damages and liabilities. And sixth, consider hiring a property manager if you need help managing your properties efficiently. Take action today and start your journey toward financial peace. Save, invest, and protect to build wealth for life. Your future starts with one smart decision today. Invest smart, live better.